Hi, today's topic is crypto narratives, Bitcoin. The Bitcoin narrative starts with an immaculate conception. In 2008, the world was reeling from the global financial crisis, and faith in TradFi was at an all-time low. A pseudonymous individual known only as Satoshi Nakamoto published the Bitcoin white paper about a peer-to-peer monetary system, and suddenly the Bitcoin revolution had begun. Fiat currencies now had a rival. Investors had an opportunity outside of the fiat system. No need for central bank intervention or greedy intermediaries. The first time Bitcoin was used as a medium of exchange was to purchase 2 Papa John's pizzas for a sum of 10,000 BTC back in May 2010. 14 years later, the cost of each of these pizzas would be approximately $200 million. In the 13.5 years since that transaction, Bitcoin adoption has amassed exponentially. At the time, the TradFi elites were skeptical of the potential of Bitcoin and were too busy being encapsulated by their own greedy bubble to see the growth of Bitcoin. In present day, we can now see spot Bitcoin ETFs in TradFi markets. Image credit. Pin 2. In the image below, we can see the historical price action of Bitcoin since 2010. After an all-time high of approximately 69k USD, its present-day price sits at around 43k USD. While there are wild volatility swings, Bitcoin has proven to be nothing short of a profitable investment for early adopters. However, it is nothing short of volatile, with the potential for even larger dramatic upswings in the future. Image credit. CoinGecko. At present, we stand at a key point in Bitcoin's history because institutional investors are now buying up vast quantities of the Bitcoin supply. Bitcoin is often seen as sound money by investors and fanatics alike. One book on the topic is titled Bitcoin, Hard Money You Can't F***ck with. Principally speaking, Bitcoin was built on ideas of decentralization, a limited supply, pseudonymity, immutability, permissionlessness, and an open source ethos. Perhaps the key irony of institutional investment in Bitcoin is that institutions might not be able to directly manipulate these principles, but they are in the best place financially to buy up large quantities of its supply. This success of TradFi crypto funds is yet to be determined, but increasingly, we are seeing increased institutional investment here. Image credit. Block geeks. Bitcoin is the subject of many zealots' fascination. Given the nature in which it was conceived, it is easy to see how this kind of mindset can be mapped onto Bitcoin's story. Historically, it has been a narrative of screw the system and defiance on an increasingly global scale. In its purest form, it is also an attractive prospect that governments struggle to tax. The quote below is attributed to Robert Frost and is a useful nod to the very concept of fractional reserve banking. Storing our value in centralized institutions exposes us to fiat currencies that are endlessly inflating. This is not an attractive store of value for the thinking investor. Bitcoin offers somewhat of a viable alternative. Image credit. Brainy quote. Hunter S. Thompson is attributed as saying, "Politics is the art of controlling your environment. By extension, controlling your own money is a key function in self-sovereignty. It is unlikely that a Bitcoin investor is able to control their entire environment through investment alone. However, Bitcoin investment enables a mindset that is focused on value that is separate from TradFi or fiat principles of control, e.g., centralized tax authority, fractional reserve banking, etc. Bitcoin investors are generally very aware and vocal of the upsides of owning your own money. However, it is what we don't know about Bitcoin investment that we should also be aware of. We should remain vigilant and mindful of fraudsters hiding in plain sight. Decentralization brings the disadvantage of no centralized protections. Storing your own money means taking complete responsibility for the security of these funds. We do not know the real identity of Satoshi Nakamoto and must always be prepared for the possibility of a long play by intelligent VC investors. Most governments are structured in such a way that politicians are owned by venture capitalist firms. This results in a kind of corporatocracy. The narrative of Bitcoin is ongoing, but the corporate takeover seems imminent. With that comes the potential of a wider proliferation of measures such as KYC protocols, regulation, and the custody of funds. Disclaimer: this is not financial advice. I'm a cow and I like to eat cereal. Any knowledge gained from this post is merely incidental, and you are responsible for your own financial decisions. Make investments wisely, and make sure to do your own research. Nothing in this video is intended to constitute investment advice. We take no responsibility or liability for any investments, profits or losses you may incur as a result of this information. Readers are encouraged to perform their own due diligence and research, or consult a licensed financial advisor or broker before making any and all investment decisions. This content is intended for general informational and educational purposes only. Though the author strives for accuracy, the data contained within the article cannot be relied upon. The author may own cryptocurrencies and tokens discussed in the article. The article may contain affiliate links. Thank you so much for watching this video. I really appreciate your support and feedback. If you like this video, please give it a thumbs up and leave a comment below. And if you want to see more videos like this, make sure you subscribe to my channel and hit the notification bell. Until next time, be safe and keep smiling.